Hello, everybody. Welcome to the Fundamental Analysis webinar this afternoon. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be presenting the session today. Before we get going, just a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Thank you. I have enough responses. If anyone has any issues along the way, just let me know. As we get going, as always, keep in mind all investments have risk. That includes trading Forex, options, spread betting, CFDs. Certainly, there's no guarantee of any one trade bringing you profit, but also there is quite obviously a good potential for each trade to bring profits. And so the idea is to manage your risk, understanding that nothing's guaranteed on any one move, but to manage things, whether with stop losses, pending orders, or AvaProtect. If you haven't seen that feature, AvaProtect is found on the AvaGo mobile app, and it's a way of managing risk as well. So you could check that out. If we have time, we'll take a look at it maybe. But in some way, you want to manage your risk in a way that makes sense for you. As we go through things, keep in mind that it's not meant to be financial advice in the webinars, but is coming from an educational perspective. And you can read the full risk disclosure statement on our website if you'd like. Okay, so what is fundamental analysis? We'll just spend a minute on these basics. Fundamental analysis is basically the news, what's happening around the world, and taking a look at how you think that fundamental news might affect particular assets on the market, and then hopefully using that to your advantage to have better profitability in the long run or even in the short term as you move forward with your trades. Now, there are a couple types of fundamental news that we typically talk about. One would be regularly scheduled economic events. As we'll look at today, there are some huge ones. Today's the NFP day, non-farm payroll, the biggest announcement out of the US each month. It's once a month, and it's typically the first Friday of each month. And so we'll take a look at that, and it'll actually be occurring during our webinar. We should still be running when those numbers come in. And we can talk about ways you can prepare for such events, ways you can take advantage of them after the fact, which typically is my preference, being that hindsight is 2020 once you already know the information. And then we'll take a look at some other fundamental news as well. And actually, before those announcements come in, we'll take a quick look at some other fundamental news, more along the lines of what we're talking about here, extraordinary economic events, which would be things like trade disputes between US and China, or news coming out about economic relief in the European Union, and any of those types of breaking news headlines that you can't predict what they'll be or exactly when they will be, but you certainly can prepare in advance with pending orders and in some different ways to be prepared for whatever does come, just in case it affects the assets in a large way, setting up just beyond resistance levels or support levels, waiting for strong breakthroughs with news that you just don't know what it'll be or when it will be, but certainly understand that something will eventually break that moves the market. And you can be prepared for that type of news as well, even though you don't have a great handle on the scope of what it will be about or when it will be. Okay, and we'll talk about some of those ideas. As we go along, if you have any questions, you want to give any input, please do so. I keep my eye on the chat box, and I'm happy to respond and add to the conversation what you might be suggesting. So quickly, let's take a look. Before we get on my demo account, we'll take a look at the fundamental news situation today. There have been some announcements already today, a little bit of mixed news, some positive news out of Great Britain, some maybe somewhat negative news out of the European Union, out of Germany, with factory orders coming in worse than expected. These numbers, we can expect to see pretty bad numbers on these scheduled economic announcements. for the near future because of the global pandemic, all the quarantining that was going on, factory numbers, PMI numbers, production numbers, all of these things. We understand why they're bad, and that there will probably eventually be a pretty quick recovery with a lot of this. But right now, it's not surprising when these numbers are coming in worse than expected. I mean, the expectation was bad, right? German factory orders nearly negative 20%, and it came in negative 26%. That certainly wasn't good for the strength of the euro earlier today. And as we go forward, here's one that was not so great either. Industrial production down huge, Spanish industrial production. If we get down to what's coming up soon, 24 minutes from now, we see non-farm payroll announcements coming. The expectation is a huge decrease in the decrease of jobs, meaning the decrease is expected not to be quite as large this time around as last month. So 20.5 million job loss last month. This month expected to be about 8 million. It says 8,000. That would be 8 million. Okay, that's the expectation. So we'll see what these numbers come in at, and the market certainly will react to it. Type OK if you're hearing me all right. I've got somebody saying that the audio is not so great. All right, seems that we're doing okay. Corey, I think it's just you. Maybe adjust the audio on your side, Corey. All right, thank you, everybody. All right, so also some Canadian announcements coming in. In addition to the non-farm payrolls out of the U.S., the participation rate, the unemployment rate out of the U.S. expected to get near 20%. That's crazy when you're thinking about the fact the Trump economy in the U.S. was down around, 2.5% unemployment rate. It was reaching record lows for months at a time. And all of a sudden, 20% almost expected to be the unemployment rate in the U.S. That could come in lower, could come in higher. I think everyone understands why those numbers are looking so ugly and that it's probably a short-term thing. What people may pay more attention to are what's this jobs number here for the non-farm payroll number, and also maybe the average hourly earnings. We'll see if they go up as much as 8.5% or more. That shows a good thing, that people are getting back to work and hourly earnings are climbing back up. So if that holds true, we could see maybe a positive momentum continue today on the markets. And we'll take a look here in a moment. The Canadian numbers will be coming in too, some important numbers as well out of Canada at the same time as the US here in about 22 minutes. So we'll take a look at those in a little while. The futures have been green pretty much all day with optimism on the jobs data. So you see it there in the headlines. There's optimism that the jobs numbers are going to look much improved compared to last month, and that's what we're seeing. The expectation from 20 million jobs lost to only 8 million jobs lost, and maybe it could be better than that. There's a lot of optimism on the markets today, and so understanding this fundamental news from earlier today, even this morning, that there was optimism about these numbers coming in. It doesn't mean they're right. Understand that. There's a difference between expectation and results sometimes. But the expectation through the day has been optimism about this jobs report, that things aren't going to be as bad as they were last month, and that there's going to be some recovery signs showing. And so predictably, the major indices have been climbing today. Gold has been dropping today, etc. Oil has been climbing. And so everything you'd expect with that type of positive sentiment and headline, it's been occurring. If we take a look, we see futures are green. We see down here that the VIX index is down nearly 3.6%. What does that mean for those of you who are new? What does it mean if the VIX index, the S&P 500 VIX index is down? Is that good for the markets or bad if the VIX index is down? What does that tell you probably is occurring today on the Dow Jones, the NASDAQ, the DAX, the CAC? Probably good news, right? Positive sentiment. So Fear is down, exactly. Fear is down. Usually when we see something in red, we say, oh, that's not good. This is the one thing that the volatility index or the fear index, when that's down significantly, usually the equities are responding positively. And that's been the case today. So through the day today, you could have already been riding this wave on the major indices, up, gold down, oil up. All of those things tend to happen with positive sentiment, positive headlines, positive momentum, and the volatility index being down. Okay. Why does oil go up when there's positive sentiment about the economy? Because people expect more demand. So oil tends to go up. Why does gold tend to go down with positive sentiment? It was a little hard to predict that way through the greatest fears through the pandemic. It's been regularizing, normalizing more now of late, that when fear is down, gold is a safe haven, so it tends to drop, right? And so these things can be quite predictable. And just taking a quick look before you start trading at the fundamentals like this can really help with what you prefer to do with your entry points. Okay. Here's another headline: U.S. unemployment rate seen near 20%. They're talking about the prediction we just looked at. When the numbers come out here in about 20 minutes, the expectation is unemployment rate's going to jump to 20%. So if the unemployment rate comes in at 20%, boy, that sounds horrible, but it's expected, right? And then what if the jobs numbers look better than expected? Even with an unemployment rate jumping to 20%, you could see the markets react positively again, even more so than they already have. Now, the opposite could be true as well. What if unemployment rate comes in at 23%, or the jobs numbers are not as good as everyone's anticipating? There's a huge potential then for a pullback today, because the movement all day long has been cooked into the idea already that there's going to be positive numbers coming on this NFP out of the US. And so if that disappoints, you could see a huge pullback, okay? So you've got the potential for both further climbing or a huge pullback with these numbers coming in. But the key thing so far has been the most predictable part is from this morning. You could have been trading in the direction of the sentiment up until the numbers come in, because you see what the expectation is for those numbers from the headlines. The expectations in the headlines are positive news expected, futures gaining, recovery optimism lingers ahead of jobs data. That's what we see. You see the evidence in the volatility index being down all day long. So it was easy to predict that maybe you should be doing buy stops as the small resistance levels were breaking through on the major indices, or sell stops as gold was breaking support levels and dropping, as people were leaving the safe haven and buying into the equities. That was predictable today, very easy to see just by looking quickly earlier in the day at this snapshot and at the headlines, and then jumping onto the charts. So what else do we see? It's not all roses, right? Ocean shipping shrinks as pandemic pummels retailers. Okay, retailers certainly got hit. We know that. It's not good news in the short term for many retailers, for the people who work there, etc. Let me check with one person saying they don't have sound. I'm just going to let him know it's just him. Okay, so I let Artie know it's just him on the sound. So, headlines like this make you put on the, take off the rose-colored sunglasses and understand it's not all positive momentum. Even though there's been great positive momentum today that was easy to see, there's still some tough news out there, especially for small businesses and retailers. Now, what about oil? Look what might happen over the weekend. Eunice, thank you for letting me know that your audio is good. What do you think that's going to do to the price of oil from Friday's close, from today's close to Monday's open, if over the weekend OPEC agrees to more cuts? What do you think? Yeah, could gap up large, right? And speaking of gaps, and by the way, oil, part of the reason oil's climbing today is because of the anticipation of this, okay? It's known that this might happen this weekend. It's not a surprise that they're going to talk. So Oil is climbing in anticipation, maybe not just with the positive economic momentum, but also in anticipation that, hey, OPEC likely over the weekend might cut production again. Okay, so this is very important to monitor. Be careful holding pending orders through the weekend, because if it gaps past your entry point, the gap will not work in your favor. You'll get the worst entry point, whether you're selling or buying. Pending orders will not work in your favor with a gap. Okay, so if you're uncertain about things, just wait till the weekend's over and then get in. Take a look at the direction of the gap, and you can trade the gap maybe to refill, or trade the direction of the gap if it doesn't start to refill the gap starting Monday morning, Sunday night. Okay, and speaking of that, let's go ahead and jump then on the charts, and let's take a look at oil, because this was predictable. We talked about it last week with the technical analysis webinar and the fundamental analysis webinar. Look what happened, exactly what we predicted. If this movement re-enters the gap, it will likely try to fill the entire gap. And we said, get your pending orders ready. Well, look at that. It's 2/3 filled now. 2/3 of the gap is filled. Had you put your pending orders and got in when this movement significantly entered the gap, you'd have a nice positive movement right now to cash in. And since the news through the weekend would probably be working in your favor, you could choose to either close now or carry it through the weekend. Depends. There's always a risk that it would gap the other way if the news breaks. There have been deals that have been thrown out last minute with OPEC meetings as well. So it's possible. What would happen if over the weekend they said no deal, we're not going to cut production? Then what would happen to oil? Probably gap down huge at the open. So again, carrying trades through the weekend, pending or open trades, you always have that risk. Okay. So yeah, oil is still refilling the gap. You see here, we talked about it last week, last Monday, earlier this week on Monday, and last week on Friday and Monday. We talked about the fact that as this gap gets entered, it likely won't have much trouble because there's no resistance through this gap until it gets to the top. And look how quickly it's gone up from 35 or 36 up to 38.5. Okay, so very easy to see. And even if you got in late, right? We said keep an eye on this wick, right? This wick right here. And if it breaks above that wick, this red line would have been your entry point on a buy stop. So that would have been at about 36.2, and we're at 38.5 now. So it went up over $2 per barrel. So I'm in a one lot position. If you've got enough in the account, that's a couple $1,000s profit, just like that, on one little move, one little pending order that we all felt like was likely to happen if it was triggered. If you had a buy stop there, it would have been triggered, and you'd be up a couple dollars a barrel easy. And some were re-entering at the true beginning of the gap, which was right here, down a little bit lower. In my mind, I felt better that once it cleared this wick, then it would have some momentum, and it turned out that was right. It actually had momentum even before the wick on the earlier part of the gap down here. But to be on the safe side, I liked this spot. We talked about this last Friday, on Monday, and there it went. So it looks very good. So this looks like it's got room to climb, especially leading up to the close of the market today, because the anticipation is oil cuts over the weekend. So this could continue to climb. Okay, you see it just now broke through this resistance level. Just in the time we were talking, it broke through the resistance level in the last 10 minutes, 5-10 minutes. Here was resistance. So when I said you could have been doing buy stops all day on some of these assets, very easy to do. Resistance level, breakthrough, buy stop, triggered. Take your profit. Formed more resistance here. Okay, breakthrough, and it climbs. Formed resistance here, breakthrough, and it climbs. So you could have had buy stop pending orders like a staircase triggered to buy. If it broke this resistance, buy on that breakthrough candle here. If it broke the next resistance, buy on the next breakthrough candle here. If it breaks the next resistance, buy. If it breaks the next resistance, buy. Okay, it would have worked 4, 5, 6 times today. All right, so could have been a very nice move on oil, and it was very easy to read with what the momentum has been today. Again, I have someone complaining about audio. Corey, most everybody has said the audio is good for them, so please check your audio on your side. I believe things are set up okay here. All right, so let's take a look then at maybe S&P 500. Do you think it looks similar to what oil did? Okay, a little pullback through part of the day, but look at the climb. Okay, we're going back. Today's the 5th. Okay, the 5th started here. Okay, look at that climb. Look at the climb here. So this is through the day today what you could have been doing. Resistance level here, resistance, and we're on 5-minute candles. This is scalping type move. Buy stop above this resistance. Once it broke through, would have paid. Okay, another resistance level formed here. Resistance, resistance, resistance. A buy stop above the resistance would have paid good again. Okay, formed resistance here. Resistance, resistance, resistance. A buy stop pending order again would have paid well up here. Once it started downtrending, you're out, right? The momentum's done. When you start seeing lower low points and lower high points, you get out. You stop the strategy. Okay. There's the downtrend. Okay. We rode the horse till it failed. Probably you could have lost on the last one if you held it a little long. So if we won 3 out of 4 on that, great. What a great move. Just going with the headlines and the sentiment that we can easily read from the volatility index and the futures and the headlines. And you didn't even have to start in the morning. This kept going throughout the day. Okay, looks like things have consolidated now. Why would this start to go sideways now, this movement? We're leading up to some huge announcements right now. Okay, so the momentum kind of died off as we get close to the announcements, and now it's going sideways, trying to find direction. So what will likely happen is we're going to get a breakthrough up or down now from this sideways movement. It's ranging right now sideways. And so soon it'll break into a likely stronger trend in one direction or another based on these huge numbers that are coming out soon. Okay, in about 7 minutes, which we'll take a look at. And so now we can go from S&P 500. We can look at the DAX. It looks like the same asset, doesn't it? Look at the uptrend all day long, then a little consolidation and sideways. Okay, waiting on the announcements. So even though there are Canadian and US announcements coming up, the world is so global anymore in terms of the market, so interconnected. Everybody's waiting to see what these numbers will be. Okay, so you could have rode with the positive sentiment today up European stocks. Okay, you could have rode up, look at the gap there. You could have rode up the Nikkei, same thing, up, 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 up. You could have been doing your buy stops and having breakthroughs rising all day long. Okay, there's a nice resistance level that broke and up it went. Now consolidation. Okay, this easily could continue to climb. And it easily could pull back depending on these numbers. So you could have a pending order down here on the Nikkei, ready to sell in case that news comes in bad out of the US and creates negative sentiment. Ready, a sell stop pending order down here would do it. And at the same time, you could put a buy stop above this resistance in case the news is better than expected and it breaks through the resistance. You could have a buy stop ready up here. Okay, little bit of a scalping move that you could do. And you could do the same thing on the Dow Jones. Looks like the same asset, doesn't it? When all the major indices look like mirror images of each other, regardless of region or country that they're in, this tells you that truly everyone's paying attention to global sentiment, global fear or global optimism. So you can draw your lines, support and resistance. It's ranging right now, and say, okay, I'm waiting. sell stop ready down here, buy stop ready up here. That's one way you could do this if you like to set things up before the announcements. Not everyone likes to do that. And I already am on record telling you, I like to wait and see the numbers. I want to see the breakthrough. Then I'll wait for my proper entry point to go in the direction I think is right. But sometimes I'll set up this way as well. You can actually get a better entry point this way. So this could be a preferred way to set up with pending orders before these announcements, but it's not the only way. All right. And you can limit your stop loss distance back above what would be the broken support here. If your entry point is here on your sell stop, your stop loss could be back above what would have been the broken support. And the same with the buy stop up here. Entry point could be up here, stop loss back below. Assuming it broke through, that should act as support then. Okay. Where you get out is up to you. Could be a scalp, and you get out at the first resistance right there, would be your exit, or it could be a longer term move. Again, that's up to your style of trading. But be aware of that next support level, because that's where it could likely slow if it went that direction. And the same on the way up, we'd want to look and say, okay, let's look at 1 hour, 4 hour, where's the resistance? There is no resistance in sight. It's been months and months and months since, what are we looking at here? The Dow Jones has been that high, so there's no resistance to see. So if that resistance breaks through, you could be looking at quite a climb to the next resistance level. On the way down, it's different. The way down, you find a support level pretty quick that it would then reach and have to try and break. So maybe on the sell, you're looking to get out quicker if it was triggered. On the buy, maybe you could be more patient. But again, that's up to each individual trader. Type OK if you're with me on that, how you could set up prior to these announcements on most any of these major indices. If someone is confused when I'm saying sell stop and buy stop, please feel free. I'll show you how to do it. Real quick, pending orders, you just switch from type, market execution, to pending. And here's your pending order type. Buy stop, buys from a higher point. That's this example. If you were programming up here, sell stop, sells from a lower point than it is now. That would be if you're programming it to sell from down here. And then you put your corresponding stop loss wherever it makes sense to you and your take profit. Program it in advance if you'd like. Okay. Very simple to do. And you see through the day today, the buy stops would have worked great on oil, on the major indices. What about gold? Before these announcements roll in, we could look at gold. Okay, what's gold been doing? Here's 30-minute candles dropping, right? Predictably, right? Positive sentiment. Gold's been dropping through the day. There are periods where it bounced up, but this is normal downward trend. Down, back up, down, back up, down, and now bouncing back up again. Okay, so if you're waiting, if you believe gold should still drop, if that's what you believe, then maybe you put a pending order up at a resistance level up here, right? Resistance, resistance, resistance. If it bounces back up to that resistance level right here, maybe that's your spot to sell. And by the way, you could believe that in the short term, if there's positive news with these announcements, you could believe in the short term gold will drop, but you still could have the overall picture in your mind in the long term that gold should go up to 1800 or something, because you understand there could be recession in a lot of economies in the bigger picture over the next quarter or two because of the global pandemic and the quarantining. So while you're scalping short movements in one direction, in this example, gold in a downtrend right now, you also could, in the bigger picture, have other positions on gold for long-term movement up, if that makes sense to you. It's you don't have to only think one direction, because the direction also many times depends on the length of the trade that you plan on staying into. Okay, Marta, buy limit, you're programming to buy from a lower point, meaning you're waiting for it to drop and then it will buy. Buy stop, you're programming it to buy from a higher point, meaning you're waiting for confirmation of an uptrend to get in. Okay, so buy limit is the traditional idea of buy low. You program it to buy from a lower point, thinking it'll go down before it goes back up. Buy stop is more of a confirmatory pending order, meaning you're programming it to buy from a higher point, not because you'd rather buy from a higher price. Certainly nobody wants to buy from a higher price, but you're willing to wait and buy from a higher price with a buy stop because then it confirms the uptrend in your mind. Okay, and the same with the sell stop, but the other direction. Okay, so we see gold predictably dropping, very easy to predict, and probably those numbers just came in. Let's take a look at what happened with the economic numbers. Okay, here we are. Look at all that green, everybody. There's a couple that were bad. Average hourly earnings didn't go up as much as expected. So the hourly pay didn't improve as much as hoped, but non-farm payrolls expected to go down by 8 million. Look, jobs went up. The US economy gained 2.5 million jobs. What do you think gold is doing right now? We just saw it spike down. Okay, had you had a pending order waiting, you could have scalped that drop if we had looked at the 5-minute candles like we did the indices, right? So we see that is huge. That is huge news, everybody. This is adding to the positive momentum. Look at the volatility index. It's down 5% now. When we looked, it was down 3%. Okay, so somebody knew something. All this positive momentum today, the anticipation of good numbers, it came true. An increase of 2.5 million jobs when the expectation was a decrease of 8 million. Talk about a turnaround. Look, private non-farm payrolls up over 3 million. Unemployment rate, instead of jumping to 20%, like the expectation, 19.7, look, 13.3%, the unemployment rate dropped. The unemployment rate dropped from 14.7 to 13.3 rather than jumping. Huge, huge, huge turnaround. Look at out of Canada as well. Same thing. Canadian employment change, instead of dropping 500,000 jobs, they went up over 250,000. Huge news. So unemployment rate lower than expected in Canada also, just like the US, all good news. So let's go back to then the movement. Look at gold dropping. And again, if we were on 5-minute candles, look how easy. Look at the pending order. Whoops, I've got the wrong direction line right here. Here was the support level. Support, pending sell stop right here. And look how good it would have paid. I'm talking $13 per ounce drop in a short period of time. Look at that. This momentum isn't going to die quick in terms of how people view this movement. What do we think oil's doing? Look at that. Almost up to 39 now. Almost to 39. If you have any doubt that this will fill this gap, that doubt is probably shrinking right now. Okay? Look at it trying to speed through the rest of this gap up to where we drew this resistance level up here. Okay, we have to go to 1-day candles to see it. Resistance level up here. We're already almost to 39 a barrel now. So very nice, very predictable. Again, 5-minute candles. Didn't we just draw this line here and say you could put another buy stop? There it goes. There it goes. Let's look at the S&P. Look at the breakthrough. It was ranging over here. We said a buy stop could get you in. You'd be in the money right now. And actually could have already taken profit up here. It spiked all the way up here. And it looks like it's trying to climb. It's just above this resistance. If you wanted to get in on a buy, put your stop loss below this support level or below 2 support levels like I like to do. It could be worth a shot. You know, I'm not telling you should buy on this, but the fundamental news says maybe you should. And then put your stop loss far enough down so that if you get a little spike pullback, you don't get stopped out too quick. Just put your exposure at a level that's okay with you, because obviously there are no guarantees on anything, as we've always said. you see the breakthrough. We just drew this line on the Dow Jones. We said buy stop up here and sell stop down here. Sell stop would never have opened. Buy stop, you would be up a ton of points right now. We're talking the entry point at the line we drew, over 100 points climb already on the Dow Jones. So it's not too late to get in on these. If you didn't put the pending orders that we were suggesting could be beneficial, you still could get in. You just put your stop losses far enough down if you're going to ride the momentum up, that if it pulls back to the support, you don't want to run into financial problem just from a little pullback. You want to be able to have your stop loss below the support levels to be able to stay with the movement. So take small enough trades if you're going to get in on it. Okay? Type OK if you're with me on this. Maybe let me know if any of you made some moves with the pending orders we were talking about, or market moves. Anyone profiting on any of these? Looks like everyone's okay. Yeah, everyone's saying all profit, doing well. Yes with oil, yes with gold, yes with S&P. Okay, great. I'm glad to see it. Now listen, at some point you have to decide. You entered a buy stop at 828. 828 on what? What asset are you talking about? In any event, hopefully it's in the direction. Buy stop if it was on oil or the indices, yeah, you're looking solid, right? And those numbers are not on NASDAQ, okay, and S&P, good. All right, so listen, any questions about anything? I mean, we don't need to drag on for an hour. We can see the major momentum today. What's the next step if you didn't trade yet? If you're not in the money on all of this, you can wait for a pullback. This momentum, those jobs numbers, that momentum, I can't see it. Now, anything can happen, right? Yeah, Mubarak, you could wait for a pullback to get in. Now, the pullback might not come for a while. This momentum could keep going. But if you feel like you missed the movement, you can wait to see if there's a pullback, then get in on some of these assets. Whether it's oil pulling back down, the indices, gold pulling back up, etc. Okay? And by the way, on gold, because we are still with a global pandemic, if gold dropped enough to a support level and you're a long-term trader, you might be looking to say, oh, maybe this is a good spot to buy on gold if it dropped to a nice support level that you like. But you know, you gotta have a read on the market and feel that that's what you want to do, right? In the short term, certainly you see the momentum right now. Okay, great. So if you're looking for pullbacks, you'd probably stay on the 5-minute candles, the 1-minute candles. There's no pullback yet, right? Buy stop is way in the money. You might wait for a pullback that goes to the first support level that's showing, like right here. This was resistance for 3 minutes, right? But it was resistance. If it pulls back to that little level, maybe that's a spot, if you feel like you missed it, to try and get in and then have your stop loss back down below. Some might say, well, I'll only get in if it pulls all the way back down to the support level, the broken resistance, then you get in. That's up to each individual trader, what exact entry point you want to hope that the movement gets to. But we can see the power of the overall fundamental news today, how easy it was to predict these movements and to get in with some pending orders as well, timed around the fundamental news that were regularly scheduled, that the first type we talked about in the initial slide that we looked at. Okay, all right, well, I think we're good here, everybody. Thank you for joining. Good luck the rest of the evening. I think you're gonna see some huge momentum still. You'll probably see some nice pullbacks that you can get in on some of these movements as well. If you're more of a longer term type trader, you certainly could just get in right away and hold for a while. Okay, everybody, have a good weekend. All of you as well. Thank you. Bye for now.